Hello viewers, welcome to my channel. I'm Hasham. So now I'm going to continue the next problem on journal entries. Problem number 11. Already 10 problems I have completed on passing the journal entries, recording the transactions in the first book of account, that is journal. And this topic is very important because writing the journal entry is the first step of accounting. So every accounting student must be aware about the recording aspect of accounting. That means how the transactions are recorded in the first book, that is journal. Already 10 problems, 10 main problems I have completed in the past videos. So if you have watched those videos, definitely you will get a good command on how to pass the journal entries. That is the basic thing. You should not ignore the fact. So now I'm going to start the next problem, that is problem number 11. So I suggest you to watch the earlier videos, then only you come to this video. If you join right now, you will not be able to understand. So go to the playlist, select the subject Financial Accounting 1, select the topic Journal Ledger, watch the earlier videos, then you can be able to understand now. Now 11th problem. Before starting the 11th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So I am reading out the 11th problem. Journalize the following transactions April 1st, 2015. So data is given for 1 month, April. Sold goods to Rakesh on credit. Sold goods to Rakesh on credit. So entry will be Rakesh account data to sales, being the goods sold on credit. Then bought goods from Mahesh on credit. So when we bought means purchased. Purchases account data to Mahesh, being the goods purchased on credit. Then received a check from Rakesh 9,500 in full settlement of his account. Check deposited in the bank on the same day. Actually, we have to receive how much amount from Rakesh? We sold goods 10,000 rupees. We sold goods to Rakesh for rupees 10,000. So 10,000 rupees are due from Rakesh. But we are receiving only 9,500 and we are allowing him a discount of 500 rupees. So we are getting a check. We are getting a check from Rakesh. From Rakesh we are getting a check. How much check? 9,500. So when we receive the check, we debit the bank account. The bank account data are 9,500. Discount allowed account data are 500. To Rakesh account 10,000. That means actually we have to receive 10,000 rupees from Rakesh, but we are receiving only 9,500 in the form of check. So bank account data are 9,500, discount allowed account data are 500 to Rakesh for 10,000. Being the amount received from Rakesh in full settlement of his account. Now next, 7th. Check issued to Mahesh 11,500 in full settlement of account. Check issued to Mahesh. Actually, we have purchased from Mahesh 12,000. Purchases account data to Mahesh 12,000. So we have to pay 12,000, but we are not paying 12,000. We are paying only 11,500. So we are getting a discount of 500 rupees. Discount received. Discount allowed will be debited. Discount received will be credited. Now instead of paying 12,000, we are paying 11,500. And we are getting a discount of 500. So entry will be Mahesh account data 12,000. Actually we have to pay 12,000 because see here, Mahesh account was credited by 12,000. Now Mahesh account should be debited by 12,000. His account should be closed. Now to bank, we are issuing a check of 11,500 rupees and discount received 500. By passing this entry, Mahesh account will get closed. Being the check received, being the check issued to Mahesh in full settlement of his account. Next, 8. Check issued from Rakesh. Check received from Rakesh, dishonored. We have received a check from Rakesh 9,500. See here. Rakesh check has been received on 6th of April. Bank account data 9,500. Discount allowed account data 500. Rakesh account 10,000. We have received a check of 9,500 from Rakesh on this date. But later on 8th date, Rakesh check was dishonored. The banker has informed that the check of Rakesh was dishonored. When check is dishonored, the entry should be reversed. The entry should be reversed. What is the entry when we receive the check? Bank account data 9,500, discount allowed account data 500 to Rakesh 10,000. This entry has to be completely reversed. Now Rakesh account should be debited by 10,000. See here, Rakesh account data 10,000. Bank account should be credited by 9,500 to bank 9,500. Discount allowed was debited. Now we credit discount allowed 500. Being the check of Rakesh dishonored, so we reverse the entry. When we receive the entry, this is the entry. When we reverse, the same entry will reverse it. Rakesh account was credited, now Rakesh account should be debited. Bank account was debited, now bank account is credited. Discount allowed was debited, now discount allowed is credited. That's all. Next, 10th. Sold goods to Suresh. Suresh account data to sales. Suresh account data to sales, being the goods sold on credit. 12th. Suresh become insolvent. Rupees 2,000 received from his estate as full and final settlement. Insolvent is a person whose liability exceeds than assets. If a person's liabilities are more than assets, he will not be in a position to pay fully to the liabilities. The person is a bankrupt person, insolvent person. So here in this case, Suresh has become insolvent. How much amount we have to receive from Suresh? 6,000 rupees we have to receive. But because he has become insolvent, we are receiving only 2,000 in full settlement of his account. The business receives only 2,000. Actually, how much we have to receive? 6,000. So how much is the loss? 4,000 rupees loss. That is called bad debts. The debts which are irrecoverable. Actually, we have to receive 6,000, but we are receiving only 2,000. 4,000 rupees is a loss. So entry will be cash account data 2,000, bad debts account data 4,000, to Suresh account 6,000. When we sell the goods, Suresh account was debited. When we receive the cash in full settlement, Suresh account is credited 6,000. His account is closed, being the final amount received from Suresh in full settlement. Right? Next, 13th. Bad debts recovered. Bad debts recovered. That means earlier we have written off some bad debts. We have to receive some amount from the customer. We thought that the customer will not pay. So we removed his name. We have written off as bad debts. Later on, he has paid the amount. So this is called bad debts recovered. So cash account data to bad debts recovered. A new account is opened called bad debts recovered account. So cash account data to bad debts recovered. Next entry is purchase machinery from Radhakrishna. Check issued for the same 40,000. Installation charges paid in cash 5,000. So actually installation charges will be added to machinery account. We have purchased the machinery for 40,000 and installation charges paid 5,000. So machine value is 45,000. So machinery account data 45,000. To bank we have issued the check of 40,000. To cash we have paid the installation charges 5,000. Being the machinery purchased for 40,000 and installation charges paid in cash rupees 5,000. Next, after 16th, 18th, depreciate machinery by 10% for 6 months. Book value of the machine was 50,000. So 50,000, 10% is 5,000. So 5,000 rupees depreciation we have to provide. But it is asking you to calculate the depreciation for 6 months. So 10% of 50,000 is 5,000 for 1 year. For 1 year, 5,000. For 6 months, half of 5,000, 2,500. So we have to provide depreciation 2,500. The entry is depreciation account data to machinery account. Depreciation account data to machinery account. 50,000 into 10 by 100 into 6 by 12, 2,500. Being the depreciation provided for 6 months. Next, 19. An old machine with a book value of 60,000 is exchanged for a new machine of 2 lakh. So presently we are having an old machine whose book value is 60,000 and we are exchanging this old machine with a new machine. The cost of the new machine is 2 lakh rupees. The old machine is valued 40,000 for the exchange purpose by the selling company. The selling company says the old machine will be taken up only at rupees 40,000. Actually book value is 60,000, but the supplying company, the company which is supplying the new machine, agrees to take the old machine at 40,000. The new machine cost 2 lakh rupees. The old machine value 40,000. So 1,60,000 rupees we have to make the payment. We have to make the payment 1,60,000. So entry will be a machine account data, new machine. The cost of the new machine is 2 lakh. To old machine. The old machine is taken up at a value of 40,000. So to old machine 40,000. How much cash we are paying? 1,60,000. To cash 1,60,000. Being the new machine purchased at rupees 2 lakh, old machine given for rupees 40,000 and remaining 1,60,000 paid in cash. Now old machine book value was 60,000, but we have exchanged it for 40,000. So 20,000 rupees is the loss on exchanging the old machine. That 20,000 loss should be debited to profit and loss account. The profit and loss account data to old machine, 60 minus 40, 20,000. Being the loss on the exchange of old machine. Next, 20th. Paid by check, rent 2,000, salary 9,000, advertising 2,000. These three payments are made. These expenses are paid through check. All expenses are debited. So I am debiting rent account data 2,000, salary account data 9,000, advertising account data 2,000 to bank 13,000. Being the expenses paid through check. Next one, 28th. Provide for outstanding salary 3,000. Salaries are outstanding. If salaries are paid, salary account data to cash. If salaries are outstanding, salary account data to outstanding salary account. Salary account data to outstanding salary account. Being the salary outstanding. And prepaid insurance 400. Prepaid, paid in advance. It's an asset. So entry will be prepaid insurance account data to insurance account. Prepaid insurance account data to insurance account, being the prepaid insurance. Last one, goods costing 900 given as charity, goods costing 2,500 distributed as samples, and 800 goods distributed among employees. All these goods are given as charities, are given as free samples and distributed among employees. Why the business is giving all these things? Because of advertisement. For the purpose of advertisement, freely goods are given in the form of charity, in the form of free samples, in the form of given to employees. So we will debit advertisement. Advertisement account data to purchases, because goods are given. Goods are given, that's why we will credit purchases. That's all. This is the end of problem number 11. Now I am reading out problem number 12. Generalize the following transactions. First one, purchased goods from Sharma having listed price 20,000, trade discount 10%. Remember one point, trade discount will be deducted from the catalog price. From the market price, we deduct the trade discount and the net amount will be recorded. Trade discount will not be shown as a discount. Only cash discount will be shown. Trade discount simply will be deducted from the price and net amount should be taken. That is the new point. So see here, purchases. Purchased goods from Sharma. So entry will be purchases account data to Sharma. See here, purchases account data to Sharma's account. What is the catalog price? 20,000. Trade discount 10%. So 20,000 minus 10%. 10% of 20,000, 2,000. So 20 minus 2, 18,000. So you should not debit or create discount. Discount will not be shown. Only in narration you can write. Goods purchased 20,000 less trade discount 10%. Next one. Sold goods to Verma having an invoice price of 40,000, allowed trade discount 10%. Again, 40,000 10%, 4,000. Deduct 4,000. 40 minus 4, 36,000. We sold the goods to Verma. Entry will be Verma account data to sales. So Verma account data to sales. Goods sold to Verma. So 40,000 minus 10%, 36,000. The narration being the goods sold to Verma on credit at 10% trade discount. 10% trade discount. In narration you can write. Next. Third. Purchased goods from Desai worth rupees 20,000. Trade discount 10%, cash discount 5%, cash paid immediately. We have purchased the goods and paid the cash immediately. So it's a cash transaction. So first of all, it's a purchases. So we debit purchase account. Purchase account data. What is the catalog price? 20,000. Trade discount 10%. So 20,000, 10%, 2,000. Deduct 2,000. 20 minus 2, 18,000. So purchases account is debited by 18,000. Now it is saying 5% cash discount. Cash discount will be recorded in the entry. So 18,000 into 5%, 900. 18,000 into 5%, 900 is the cash discount. So we credit here to discount received 900. So actually we have purchased the goods for 18,000 and we are getting a cash discount of 900. So 18,000 minus 900, 17,100 will be the cash paid. So to cash 17,100. All the calculations I have shown here. 20,000 minus 10% is 18,000 into 5% 900. So 900 is the discount received. And 18,000 minus 900, 17,100 cash paid. Being goods purchased and cash paid. Next, fourth. Purchased goods from Dinesh worth rupees 50,000, trade discount 10%. So 50,000 minus 10%, 5,000, 45,000. So purchases account data 45,000. Now, trade discount 10%, 5% cash discount and half of the amount paid immediately. So we'll make the calculations. Total 50,000 minus 10% trade discount. So 45,000 rupees of the purchases we have debited. 5% cash discount. So 45,000 into 5% comes to 2,250 cash discount. So we credit discount received 2,250. Now deduct 45,000 minus 2,250. Now we have to pay 42,750. We have to pay 42,750, but we are paying half the amount. Half of 42,750 comes to 21,375. Only 21,375 we are paying. Remaining 21,375 we will pay afterwards. It's a credit purchase. So we'll write the name. So to Dinesh, half of the amount we have to pay in future. To Dinesh 21,375, to cash 21,375, to discount received 2,250. Being goods purchased from Desai, half of the amount is paid. First you deduct the trade discount. Net amount is 45,000, debit to purchases. From 45,000, 5% cash discount. So 2,250 cash discount received. Remaining amount 42,750. Half of 42,750 paid cash immediately. Remaining half transferred to this side. Being goods purchased and half of the amount paid. Next, fifth. Sold goods to Anup. Sold goods to Anup 40,000. Allowed him discount 10%. 40,000, 10%, 4,000. Deduct 4,000, 36,000 rupees are the sales. And cash discount 5%, he paid cash immediately. That means it's a cash transaction. We got fully cash. So cash account data, discount allowed account data to sales. Actually, how much are the sales? 40,000 minus 10%. 36,000 sales. So sales account is created by 36,000. 5% is the discount allowed. 36,000 into 5%, 1,800 rupees discount allowed. Now 36,000 minus 1,800, 34,200 rupees are the cash received. So cash received is 34,200. Discount allowed 1,800 to sales 36. Being the goods sold, discount allowed. Then sixth one, sold goods to Rajesh worth rupees 60,000. 10% discount. So 60,000 minus 10%, 54,000. So see here, 54,000. 60,000 minus 10%, 54,000 worth of goods are sold. So to sales account is credited by 54,000. Then 5% cash discount. So 5% of 54,000, 2,700 is the cash discount allowed. Cash discount allowed. So discount allowed 2,700. Now how much is the amount due? 54,000 minus 2,700. 51,300 rupees are the amount due. Amount due. But half of the amount is received immediately. So 51,300 into half, 25,650. So right now we have received cash 21,650. cash account data 21,650. Remaining 21,650 we have to receive from the party. Who is the party? Rajesh. From Rajesh we have to receive. Rajesh account data 25,650. Discount allowed account data 2,700 to sales 54. Being the goods sold, half of the amount is received. Next, purchased goods for cash 10,000. VAT. VAT stands for value added tax. The value added tax is 10%. The goods are purchased. The entry will be purchases account data 10,000, VAT account data 1,000 to cash 11,000. We have paid the VAT, value added tax 1,000. So that will be added. Total cash paid is 11,000. Being the goods purchased and cash paid. 8th, cash sold goods for cash 20,000, VAT charged 10% and cartage charged to the customer 500. Sold goods, the entry will be cash account data. So cash account data 22,500. Actually goods value is 20,000. So to sales are 20,000, VAT is 2,000 and cartage charges are 500. The combined, the total amount is 22,500. Being the goods sold and VAT and cartage charges are made. Next, goods destroyed by fire 10,000. How would you deal? In 3 different cases. Goods destroyed by fire 10,000. So the first entry for the gross loss is, entry for the goods destroyed by fire is loss by fire account data to trading account. Loss by fire account data to trading account. This is the entry for the gross loss. Now we have to see whether it is insured or not. Now first case, if it was uninsured, not insured, no insurance policy is taken, that whatever is the gross loss, that is the net loss. So entry, if goods are uninsured, then profit and loss account data to loss by fire. Here first entry loss by fire was debited. Now loss by fire should be credited, same 10,000. The whole 10,000 should be charged to profit and loss account if it is uninsured, not at all insured. Second case, insured. The insurance company admitted the claim in full. The stock was insured and the insurance company has promised to pay the full 10,000 rupees. That means no net loss. 10,000 rupees worth of goods were destroyed and the insurance company has agreed to pay full 10,000. So no loss, no net loss. So entry will be insurance company account data to loss by fire. The loss by fire first entry we have debited. Here second entry we are crediting, closed. So we have to the amount due from insurance company. Third, insurance company admitted the claim to the extent of 6,000. So the total loss is 10,000, but the insurance company has agreed to pay only 6,000. So remaining 4,000 rupees should be charged to profit and loss account. So entry will be insurance company account data 6,000, profit and loss account data 4,000 to loss by fire 10,000. These are the 3 different situations. If uninsured, not insured, fully insured or partly insured. That's all. So this is the end of problem number 12.